Good afternoon. This is Larry McMillan with a stock market update on Monday afternoon, April 24th. So S&P has been turned back once again at the 4,200 level. And while that's important, the bears have not really done much with that. The decline has been modest since first reaching that level about 5 days ago. And we do see support in the 40.50 to 40.70 area. Below there, if S&P were to fall below 39.50, then that would be a more negative result. In any case, the equity-only put-call ratios remain on buy signals as they continue to decline. The weighted ratio has reached the lower levels of its chart, which is another overbought signal. But we're getting a major overbought signal right now from realized volatility. The realized volatility of the S&P 500 is down to 8%. That's the 20-day historical volatility. It's down to 8%. That's an overbought condition, and when it rises back up to 10%, that will generate a sell signal for the broad stock market. The last time this happened was December of 2021, and we know that was right before the bear market started. So this is not an indication to be taken lightly. Meanwhile, breadth has been poor, and so we do have new breadth oscillator sell signals generated last Friday. And while this indicator has sometimes had whipsaw problems, we are taking positions in line with that new sell signal. The number of new highs and new lows on the New York Stock Exchange remains about the same, so that indicator isn't telling us anything right now. Meanwhile, VIX is declining still, and it's down around 17. But as I said, with the 20-day historical at 8, VIX often lines up with that. Not when the historical is that low, but VIX at 17 with the historical at 8 is a pretty wide spread. I don't really expect VIX can advance from here until realized volatility starts to advance as well. In fact, it's probably more likely that VIX would fall from here. There's a new VIX index out today, the one-day VIX, CBOE's tip of the hat to the zero-day expiration crowd. So the one-day VIX measures the implied volatility of S&P 500 options that expire in, 1 day. So there's no product on that. You can't trade it, but you can just look at it. Meanwhile, the construct of volatility derivatives remains positive for stocks, and the trend of VIX itself, as it's continuing downward, that also remains positive for stocks. So overall, most of our indicators are still somewhat bullish, and we are beginning to see now these overbought conditions and one new sell signal from breadth. So perhaps the pendulum is swinging, but right now, we are trading just positions in line with our individual indicators, and we're not taking a core position. I invite you to visit our website, take a look not only at our daily letters, but also the CBOE 50th anniversary page that we have going there. And meanwhile, have a great week trading.